which means you'll get to use $3,000 against your Roth conversion. The other amount would be used against future capital gains, which have nothing to do with Roth conversions.
Cynthia writes in from Tennessee, Big Al. She goes, hey, Andy, or Andre is what.
Yeah, that's the first.
Well, Andre. Joe and Al, in June of 2021, I made a business loan of $300,000 to a Connecticut LLC that is a startup company in the medical equipment business. The money was used to buy medical equipment for the business. It is clearly a loan, all capitals. And I have no equity interest. I have no personal relationship involved with the transaction nor this company.
Okay, pretty clear.
Okay, we are not attorneys. We don't care.
We might. Depends on the question.
The company has never made a profit since its inception of 2 years. The income received does not cover costs, expenses, and continues to borrow funds to keep it going. They cannot make payroll and owe employees wages payable. The loan agreement was for a 60-day bridge loan with additional capital was secured by a local bank. The loan is document is written agreement and signed by two members of the LLC, secured by collateral, medical equipment units, has interest of 2% per month, 24% APR. It's pretty good.
Yep, great.
Calls for all costs of collection to be responsible of the borrower. If a breach occurs, the entire loan could be called immediately. To date, I've received $71,000 interest only through February 2022. No payments have been made to me since February 2022, and no payments have ever been made toward the principal. I did report the portion of interest income received on 2021 on my 2021 federal tax return, even though I did not receive a 1099 INT from this business.
Ooh. And you wouldn't, because they're not a bank.
Currently, I am owed $42,000 in interest in $300,000 of the base loan principal, assuming the loan has defaulted and I will collect nothing more on this business loan. Here is my question. Can I claim this loss on my 2022 federal income taxes? My federal tax liability for 2022 would normally be about $50,000 on approximately $265,000 of taxable income. Note, my tax bracket is 24% with an effective tax rate of 17%. At approximately $4 million in traditional IRAs, I want to convert enough monies to the Roth IRA to cover the business loan loss and reduce or eliminate my tax liability. I knew that was going to happen. Right when I started reading this loan, I'm not involved. I don't know anyone. These jerks didn't pay me. So can I do a Roth conversion of the same amount and not pay any tax?
That is the question. The answer is no. Well, first of all, do you even have a loss, right? And so the way the IRS looks at this is if the loan had value, in other words, if it still had value at the beginning of the year and it had no value at the end of the year, which you have to go through some hoops to be able to prove, which it doesn't sound like you're there yet, but let's just say you can. Even if you can prove the loan had no value, and you gotta look at an IRS publication or talk to a CPA. It's pretty complicated how this works, but that's the idea. Had value at the beginning of the year, no value at the end of the year. Then you do have a loss. It's in almost all cases, it's a capital loss. It's not an ordinary loss, which means you'll get to use $3,000 against your Roth conversion. The other amount would be used against future capital gains, which have nothing to do with Roth conversions.
Yeah, Roth conversions, ordinary income, capital loss is a capital asset. So just like if you bought a bond fund, okay? So a bond fund is a loan. It's a loan. You don't know anyone on the other side of the loan. And so let's say, right, interest rates go up, bond prices go down. Sometimes, bonds, they don't pay.
Yeah.
And so that is a capital loss. Just because this was a private investment doesn't necessarily make it an ordinary loss.
Now, I will say there is something called a business loan loss, and that you usually, which is an ordinary loss, usually you have to be a bank or in the business of making loans to businesses, and which does not necessarily sound like the case based upon these facts.
I wish it was true, though, because it's like, hey, I made this investment to the small startup.
Yeah.
And I felt, I'm funding the company.
Right.
I'm helping them, pay payroll, and I feel like part of it. And then all of a sudden, hey, I mean, she got paid.
She got paid pretty good.
Yeah,
on the
70
interest.
grand. It was like, oh, well, I'm killing it. And then all of a sudden, that's what startups do, right?
Yeah, that's why you got a 24% interest rate. There's a lot of risk here.
There's a ton of risk. Risk and expected return are related.
Yep.
It's they kind of went defunct and weren't able to pay, but you did get 72,000. But if that's interest only, so I guess would
and once you do have a deductible loss, I'm not even sure if it's 2022 because of what I just said, but when you do have a loss, you'll have in all likelihood a very large capital loss, which you'll be able to use for many years against future capital gains. So it's not all bad necessarily.
No.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.